Hey guys, what you are looking at right here is called my EX-DIVIDEND calendar for August of 2021. This is a calendar that is custom to me. So in the past, I have asked, do you guys want to see my EX-DIVIDEND calendar? A lot of you said yes. I said, okay, I'll share it with you every month. And then, a month goes by and I didn't do it. So I'm back again, gonna share my calendar with you guys this month. When I say it's custom to me, what I mean by that is every single stock that you are looking at on this calendar is a stock that I personally own, with the exception of one company, and that I put in bold blue font. I will explain why that is still on this calendar in just a couple minutes. Out of all of the stocks that you see on this calendar, there are 7 in particular that could be considered buys. If you're thinking about buying any of these stocks, then what you may want to do is you may want to consider buying it before its ex-dividend date. If you do that, then you will be entitled to collect the company's next dividend payout. If you buy the stock on or after the company's ex-dividend date, then you are not going to collect the payout. All right, first stock up is American Electric Power, ticker symbol AEP. AEP goes ex-dividend on August 9th, so any shares that you buy before then, you will collect its next dividend on September 10th. Dave Van Knapp recently featured AEP as his dividend growth stock of the month for April of 2021. He came up with an estimated fair value price of $85. Dave is typically willing to pay up to 10% over his estimated fair value price, so his max buy price on AEP would be $94 per share. Jason Fieber also covered the stock recently as his undervalued dividend growth stock of the week. He came up with an estimated fair value price of $88.48. So with the stock trading at around $88.12, that is why AEP is on our potential buy list for August. The stock currently pays 74 cents per share per quarter. So 74 cents times 4, because there's 4 quarters or 4 payments in a year, we come up with an annual dividend payment of $2.96. So divide that by a recent price of $88.12, and that is what we come up to for its forward dividend yield, so 3.3%. You can see that down here. Just to give you an example of how this actually translates into a payday on September 10th, I currently own 252 shares of AEP in my regular brokerage account at JP Morgan Chase. So 252 times 74 cents, that's the dividend per share per quarter, $186.48. That is what I will collect on September 10th. So again, 4 quarters in a year. So I'm collecting this every quarter. So 186.48 times 4, and that's what JP Morgan lists down here as my estimated annual income from AEP. Now I invested $20,000, a little less than $21,000 in this stock to get $745 and change per year in passive income. Because this is a dividend growth stock, that income should go up every single year. Next stock up is Enbridge, ticker symbol ENB. Enbridge goes ex-dividend on August 12th with a payout date on September 1st. Now, Enbridge is the only stock that I am featuring on my ex-dividend calendar that I do not currently own. So I don't own shares. Nevertheless, I wanted to include it on this calendar because it is on my potential buy list. And it's on my potential buy list because Jason Fieber recently covered this stock as his undervalued dividend growth stock of the week. He came up with an estimated fair value price of $49.29. As you can see, the stock is currently trading around $39.35. So what that means is $39.35 out of the $49.29. It is about 20% undervalued at recent prices, which is just bonkers. That is a good deal. On top of this, though, so not only do we get a 20% discount on Enbridge, the stock is yielding 6.6%. This is on my potential buy list. If I decide to buy shares, which I am seriously considering, well, I'm going to want to buy them before the ex-dividend date, so before August 12th, which means August 11th or sooner, I'm going to be adding this stock to my portfolio. Next stock up is good old Amgen. Amgen goes ex-dividend on August 16th. Buy shares before that date, you'll get paid on September 8th.
This was also one of Dave Van Knapp's recent dividend growth stocks of the month. He came up with an estimated fair value price of $234 with a max buy of $257 per share. Jason Fieber has covered this stock at least 2 times recently, and his latest analysis came up with an estimated fair value of $262.57. So with the stock trading around $241, it's going to be 241.54. Let's just use Dave Van Knapp's max buy price. It's about 6% undervalued right now, and it is paying $1.76 per share per quarter. Works out to a forward dividend yield of 2.8%. Here's another example of how this works in real life, how all these numbers and these dates translates into cash. Well, I personally own 116 shares of Amgen in my regular brokerage account. So I multiply that times the upcoming dividend payment, which is times $1.76 per share. On September 8th, I will collect $204.16 from my Amgen holdings. Next stock up is Walgreens Boots Alliance, ticker symbol WBA. Walgreens goes ex-dividend on August 19th. Any shares we buy before that date, we will get paid on September 10th. Now, I came up with an estimated fair value price of $55 per share for Walgreens. I'll explain how I get to that number in just a minute. If we consider $47.15 per share at recent prices, and let's just go with my $55 per share fair value estimate, that would mean that the stock is about 14% undervalued. So Walgreens is paying almost 48 cents per share per quarter. Its forward annual dividend yield is quite attractive here at about 4%. I valued Walgreens using 3 of the 4 valuation models that Dave Van Knapp uses. If you are not familiar with that, then I'm going to put a link in the description to Dave's lesson on valuation. He dedicated an entire lesson to explaining how he values a stock. And he uses 4 models, and I like to use 3 of those 4. So for the fast graphs model that I used, I came up with an estimated fair value price of $63. Morningstar is pretty simple. There's no calculation needed at all. I just went to Morningstar for Walgreens. And then for the third model, I am simply comparing the stock's current or forward dividend yield to its 5-year average. The big picture behind that is, all else equal, is the stock giving you more yield today than it has, on average over the past 5 years? And the answer to that is yes, it is. And I had to use a floor because it is actually significantly higher. Its current yield is about 4%, and its 5-year average yield is 2.7%. So I did it the conservative route, and I put a floor on it. $59 per share for that model. So taking the 3 numbers and averaging them together, so $63, $44, and $59 gives me a final estimated fair value of $55 per share for Walgreens. Here is how I am taking advantage of this opportunity. I'm doing a couple things. The first thing I did was I bought 214 shares of Walgreens for my buy and hold portfolio. So I just invested about $10,000 into Walgreens, and you can see with its 4% yield, that translates into an estimated annual income of a little over $400. The next thing that I did was, in my retirement account, I bought 200 shares. I bought 200 shares at $47.10 per share. And at the same time that I bought those shares, I sold 2 covered call options on them that generated $3.05 per share. So over 200 shares, that translates into $610 in cash. That's instant income that hit my account when I made this trade. So even though the stock is already yielding 4%, which is really, honestly, it's a nice figure to get in today's market environment, I'm able to boost my annualized yield from Walgreens to 11.5% to 13.1%. So I'm able to nearly triple in what I would consider an already nice yield. And I am doing that by selling the covered call option. If you have no idea what I'm talking about, but you're kind of interested in learning how to generate relatively safe, high yields from dividend growth stocks like Walgreens, I'm going to put a link in the description to a video that I did where I really spend quite a bit more time on walking you through how I sell put options and how I sell covered call options. Next stock up is Huntington Ingalls Industries, ticker symbol HII. HII goes ex-dividend on August 26th. Any shares that we buy before then, we get paid on September 10th. Jason Fieber recently covered HII as an undervalued dividend growth stock of the week. He came up with an estimated fair value of $232.08. So at recent prices of around $205, the stock is undervalued. How undervalued is it? Well, 205.13 out of 232.08. It is about 11% undervalued. It's paying $1.14 per share per quarter. It yields about 2.2%. So I just bought this stock for the first time on July 19th. I bought 20 shares, so I invested about $4,000 into HII. And then today, the day that I'm recording this is still quite new, so it doesn't show up here, but I invested another $2,000. So I had about $2,000 recently in the past few days hit my account in dividends. And so I just reinvested them this morning into HII. That's why you can see there's a difference down here, a total value of about $4,000, and up here $6,000 because my latest purchase hasn't registered yet. So this could be one of the best stocks that you could be buying right now. So I'm going to include a link to Jason's latest video on HII in the description below. He goes into all the details on the opportunity that we have with HII. If you want to join me and collect the next payout from the company, then you want to buy shares before August 26th. Next stock up is Allstate, ticker symbol ALL. Allstate goes ex-dividend on August 30th. Any shares we buy before then, we will get paid on October 1st. Jason covered Allstate as well as one of his recent undervalued dividend growth stocks of the week. He came up with an estimated fair value of $139.32. So you can see at recent prices of about $130 per share, the stock is undervalued. How much undervalued, you ask? Well, $130.05 out of $139.32. It is about 6% undervalued right now. It's paying 81 cents per share per quarter. It's got a forward dividend yield of about 2%. Allstate is another stock that I have been buying. I started buying it back in June. I am following Jason's lead with buying shares of this stock. This is a stock that he first featured over in Patreon. One more example of how this all translates into passive income. I own 78 shares of Allstate now in my buy and hold regular brokerage account. So multiply that number of shares times the quarterly dividend payment of 81 cents per share, and I am going to collect $63.18 from Allstate on October 1st. Some of you may be thinking, gee, Greg, that's not a heck of a lot of passive income to be generating from a $10,000 investment. And I would say, I've got to agree with you. I don't think that is a heck of a lot of income. So something else that I did to boost the income, remember, I do want to own shares in my buy and hold portfolio because that income stream should only go up over time because I'm buying this stock while it's undervalued, should also see capital appreciation. And my downside risk is also reduced a little because I'm buying shares when they're undervalued. But I do also like to generate higher income than a 2% dividend yield. And so what I did with Allstate was I sold what's called a cash secured put for $8.70 per share. I sold one of these puts, generated $870 in instant income. And so how this trade will work out, if Allstate falls below $125 by expiration date, which is January 21st, 2022, well then I may end up owning shares. But I'm going to be owning them at a cost basis of $116.30, which is a 16% discount to Jason's estimated fair value. So that's one scenario. So scenario one, I end up owning 100 shares of Allstate at a discount. Scenario two, if Allstate rises or if it's above $125 by January 21st, then I will walk away with a 7% cash return in 218 days, which if I can repeat that over the process of a year, that works out to an 11.7% annualized yield from Allstate, which is a stock that is yielding about 2%. So I'm getting roughly 6 times the annualized yield by selling a cash secured put option like this. And I'm doing it safely because I'm doing this while the stock is already appears to be undervalued. Again, if you have no idea what I'm talking about when I'm doing all this stuff, I did put together a video that goes into a heck of a lot more detail on selling cash secured put options. So I will put a link to that video in the description below. And last but not least of our 7 stocks to buy before August 31st, and here's where that August 31st date comes in, is Lockheed Martin. Lockheed Martin, ticker symbol LMT, goes ex-dividend at the end of the month. Jason Fieber has covered the opportunity that we have with Lockheed Martin multiple times. His latest analysis comes up with an estimated fair value of $500.53. Dave Van Knapp has also covered Lockheed Martin, I want to say at least twice recently, and his estimated fair value is $431. 10% above that would give a max buy price of $475 per share. With the stock at around $372, this stock is undervalued right now. It is paying a dividend of $2.60 per share per quarter with a forward dividend yield of 2.7%. My final example of how all of this translates into passive income is I currently own 99 shares of Lockheed Martin in my long-term buy and hold portfolio. So 99 shares times $2.60 per share, which is the dividend, then I am going to collect $257.40 on September 24th from my Lockheed Martin positions. So if I multiply this out by 4, that is how much I can expect. So $1,029, that's how much I can expect to collect from this position of 99 shares over the next year. And of course, because this is a dividend growth stock, if the company continues to keep growing its dividends, which we all, of course, expect it to and hope it to, then that number is just going to go up every single year. Again, this is what is so attractive about investing in dividend growth stocks for the long term, is you just buy and hold them and you collect growing dividends.
All right, that's all we've got for today, you guys. Thank you if you stuck around to the end of this. I appreciate it. I hope you got something out of it. If you did, please consider giving this video a thumbs up. That helps us. If you're not already subscribed to the channel, then please consider subscribing. If you want to get an alert the next time that one of us here at the channel posts a video, then tap or click on the notification bell and YouTube should let you know. Thank you very much. Stay safe and have a great rest of the week.